Good evening, traders. Here's your market summary as we wrap up the day, focusing on the US dollar, oil, and gold. The US dollar gained strength today following comments from Fed Chair Powell. In response to questions about soft survey data, Powell made it clear that the Fed will not act on early signs alone. Instead, he emphasized that any rate moves will only come after confirmed weakness in hard data. Preemptive cuts are off the table for now. Powell also took a firm stance on the Fed's independence, brushing off recent criticism from President Trump. His hawkish tone wasn't expected, but it was enough to give the US dollar a boost. Looking ahead, any changes in the Fed's direction will heavily depend on the outcomes of the trade deals, such as the early progress seen between the US and the UK. If these deals improve the economic outlook and keep inflation in check, the Fed may stay put. Without real progress, rate cuts could come later in the year, but for now, the dollar remains supported by a firm policy stance. In the oil market, OPEC has made a surprising shift, moving from defending prices to protecting market share. The group announced that production increases originally planned over an 18-month period will now be fast-tracked, likely hitting the full 2.2 million barrels per day within just 9 months. The shift comes amid growing internal tensions, especially between Saudi Arabia and countries like Iraq and Kazakhstan, which have been exceeding output quotas. As a result, analysts are now expecting a larger supply surplus through 2025. Brent crude forecasts have been revised downward from $70 to $65, with Q4 prices projected closer to the $59 mark. The big question is now, how long will OPEC hold this strategy? It's a risky move with Saudi Arabia to trying to balance its balance of payments. It would need crude oil to go up to $90 per barrel. Lastly, talking about gold, gold continues to shine with a long-term target now set at $4,000 per ounce. Analysts at JP Morgan are among the ones that are forecasting this move, citing continued global GDP growth, persistent central bank buying, especially from emerging markets, and strong demand for ETFs, the jewelry sector, and tech. Earlier this year, the target was set at $3,500, and we've already surpassed that. But even with bullish momentum, it's worth noting that gold's path isn't just one directional. If we see further improvements in the global economy and geopolitical tensions ease, especially with optimism surrounding the US-China trade talks, some of the safe haven demand could fade away. In that case, gold could give back some gains and retrace towards previous support zones. That's why diversification remains key. While we stay bullish on gold, the balance between risk assets and hedges is more important than ever in this environment. That's it for today's evening market outlook. Happy trading, and I'll catch you next week.